Okay, let's take a quick look at how we can use Morningstar to look up financial information for companies. So the starting point is to go ahead and enter the beginning of your company name up here. So for example, if you were searching for Home Depot, go ahead and enter home, and then you can scroll down. You can see here Home Depot, and you can just click on it. Or if you were searching for Lowe's, you just type in Lowe's companies right there, and you click on it. I'm going to look for Harley Davidson. And there's a couple, notice that. Well, one is Frankfurt. We don't want that one. Let's get some more information there. Now we've got the one for the New York Stock Exchange. So I'll go ahead and click on that, and it should pull up Harley's stock information for us. So the main page gives you a lot of information, but it's very abbreviated. It's quite a summary. So you can see Harley Davidson. Here's the stock symbol given here, the last price of what the stock is trading for, some other information as you flip through, dividends, key stats, which we'll be looking at, and then financials, which is what we're going to focus on right now. So you can click on the More button. That'll take you to the financials, or you can come up here instead of scrolling down and click on the financials right there. Okay, so what we are given is probably, let me change these. Probably what you're going to see is something like this. So you'll see the oldest year here to the left side and the newest year towards the right side. So I always change mine to descending because I like to see the oldest year closer to the titles of the in the financial statement. And then right now it's being presented in dollars. We'll look at it in percentages for a second. So up came the income statement. We can also switch and look at the balance sheet or the statement of cash flows. So when we're looking at a vertical analysis of the financial statement, what we're going to do is reset all of the revenues to 100%, and then every category of the income statement will be stated as a percentage of revenues. So what we're left here is for every dollar of revenue, you can see here, the cost of revenue or cost of goods sold is 60.36%. So that would mean for every dollar of revenue, 60.36 cents goes to pay for the cost of the merchandise that they're selling. So that's the cost of the merchandise that they're selling, which would be their motorcycles and their other products that go along with that. So their gross profit on that is 39.64%. So they're making 39.64 cents in gross profit on every dollar they sell. Now with that gross profit, they have to pay all of their other expenses, pay their salaries, their rent, their insurance, utilities, every kind of conceivable expense that a company might have. So in this case, their total operating expenses are 20 cents on every dollar, 20.08. And then you can see their other expenses, interest, taxes, we have to take that into account. And when we get down to it, 12.44 is their net income percentage. So that means for every dollar sold, Harley Davidson in 2013 gets to put 12.44 cents in their pocket. Now that's really good information if you're particularly if you're a small business owner, because you want to know, again, for every dollar you're selling, how much money you're making. So for your assignment, you're asked to look at the cost of revenue here, your total operating expenses, and your net income. So when you would enter that in your assignment, you would enter 60.36. And then for the next year, 61.26. And then the oldest year, 62.8. And I also ask you what's happening. Is it trending up or down? So in this case, we went from 62 to 61 to 60. So as a percentage of sales, the cost of revenue is actually going down. And you can see these little graphs over here. You can actually view what's happening to the cost of their goods sold over time. So it's trending downwards. You can see in 09 and 010 it was trending upwards. Now it's starting to trend downwards as a percentage of sales. And you can do the same thing with your operating expenses. They're going down. That's good. That means they're controlling their expenses well. And their net income is going up. That's a good trend as well. We like to see that movement upwards. So really good information there. We can change it back. Something kind of interesting to note here too. You can change it back to dollars. So you can see their revenue is growing from 11, or we can even go back further. Every year it's growing. And their cost of revenue is actually growing as well, but as a percentage of sales, we just saw it was going down. So even though it's going up, it's not going up as quickly as their revenues are increasing. And then you can come down here to the all-important net income, and look, they had a loss in 2009. They made a good recovery in 2010. Now they've made some great gains in 2011 and continuing to increase year after year. So if you were going to invest in Harley, this is obviously a good positive sign. Now we could switch to the balance sheet, and we can do the same thing. We can look at it as a percentage of total assets. So let's look at all the categories as a percentage of total assets. So we got total assets are going to be set to 100, and then every category in the balance sheet will be shown as a percentage of those total assets. So their cash on hand, it's been going down as a percentage of total assets from 2011 to 2012 and 2013. Again, if you were asked to enter that, you would enter it as 12.39. Go ahead and leave off the percent sign. Total current assets. Let's see what else is interesting. Current liabilities. What's happening to their current liabilities? These are monies that are due within the current year. So obligations, they have to pay something within the current year. And those are going up and down. You can see 24, 21, 27 to 16, back up to 26. But what's happening to their long-term liabilities in the same period? So you can see it looks like maybe they've shifted some of that long-term debt into short-term. So that's not necessarily a bad trend if they're going to get that all paid off. But their liabilities run about 68% of their total assets. So you could say 68% of their assets are financed. And then you can see the equity in the companies is growing steadily year over year. So some good information there. And again, you can always look at the graphs if you want to see what's happening. Hope you found that useful. Thank you.